Hey traders, what's going on? Jamie Saettele here. This is the Midweek Strategy webinar, and it is October 12th, 2016. Let's get started. Let me know real quickly that you can hear me, that you can see the screen. I've got a lot to get through today. One of the most important times, I think, of the year, actually. Right now, some of the inflection points that are lining up in the marketplace. Let's start with Euro. I do think it's pretty or if you've been reading some of the updates, you kind of know what I'm thinking. And we are at this point looking towards the 108.80 region, at which point you could actually end up getting a major low. But trading wise, the next move would be to sell a rally. If you get a rally, look, I don't know if you will get a rally. This is, after ranging for so long, kind of hearkened on that recently. After ranging for so long, many people get conditioned or used to, the range environment, right? And buying weakness and selling strength. Well, that's a really dangerous mentality, because when you get a move like this and it just doesn't really end, you kind of, that's when you take a big drawdown, a big loss. So I do not really advocate trying to pick a low right here, although the 4-hour bar just closed and we do have a pretty nice outside reversal here. So if we're going to bounce, this is about as good a place as you have to bounce. This is the median line, right, of the structure. And resistance, again, is, ideal resistance, right, would be probably up near 111.20. You've got the former lows there, right? You've got kind of a confluence of former support line, as well as the 50 line here, which, itself actually cut through some levels. So that would be your ideal spot. I just don't know if you're going to get all the way up there, right? So that's why I was thinking kind of 110.80 as the area. And let's look at this a little bit more. When I'm looking at these charts, when I'm looking at these charts, get rid of the some of these horizontal lines here. Yeah. All right. Clean it up a little bit. Okay. So 110.80 is kind of where I was looking at, right? Eileen, just real quick as a question. So from here, not really good to chase down Euro from current small bounce. Let me look. This is the thing. I'm telling you what I do. It's not my style to do that. I can't speak for anyone else. I mean, people might try to pick, some lows here and there. Like Mike, for example, likes to kind of trade really short term. So you might get a bounce to play. For me personally, right, my trading style, we have a breakdown. Okay, so this is a breakdown. I'm of the mind that this breakdown travels to the next big level on the chart, which is, 108.80 or so. It's a year open, or 108.72 is the year open. And weekly reversal support is 108.75. Okay, so that's where I'm looking before I would want to be a bull. Right, so that's still a ways away. The trading move for me then is to trade into that level. Okay, so where is the resistance? Well, again, we said that you're in this breakdown type of move, and you may not see much of a bounce because, again, the market is so used to these types of ranges, right? And it's probably not going to let people off the hook that are long. So I'm looking at 110.80 as resistance. 110.80, if you just look back, look, the low from last September, 110.85, right? Pretty close to the Brexit area. It's pretty obvious that the 111 area has been a pretty important level. Okay, you just, put a 111 line on this chart, right? The low back in January of 2015 was 111. Okay, that was really the first kind of support you had, on the way down. And you look across, and then you had congestion there. In fact, just last October, you had the breakdown. So ECB breakdown, you retested 111 before going lower, 110.95. In reality, we're kind of looking at the same thing here. Now, I don't think you go as low this time, okay? But I'm kind of looking for a move like that, where you get a retest and then you head, a couple hundred points lower. 111, obviously, May low, okay? Consolidation all around that level at Brexit. Brexit, you closed at 111, okay? So it's just a big spot, in order to get a short on. I mean, I'll short 110.80, right? Here's another thing which is interesting with Euro is if I were to put up a chart of, this is it. This is a 480-minute bar chart. So what you've got is 1, 2, 3, 4, 5, 6, 7 straight. So 480 minutes is one session. Okay, that's what we're looking at here is one session. And so far, 1, 2, 3, 4, 5, 6, 7. We have 8 sessions in a row that are down. If we close down here on this session ends today at 5 p.m. New York time. If we were to finish down here, you'd have 9 straight sessions where you went lower. Now that's pretty rare. Okay, in fact, it hasn't happened since you had basically during the collapse. And a session, again, is like the US session, Asia session, European session. So interestingly, looking at when, that has happened, it happened last August, okay? Then you got a bounce, okay, from 132.40 up to 132.95, right? Canwall, I will take a look at the crude and silver and everything here in a moment. I got a lot to get through today. 9 sessions down. This was the beginning of 2015, actually. And then you got a bounce, okay, from 1873 to 1975. So 100 pips on that one, 50 pips on the prior one. And then you had the same thing happen in March, okay, of 2015, and you got a bounce from 1822 to 1906, so 80 pips. So you see what I'm saying is that if we actually end up finishing down here, you have 9 sessions down. You might actually, that means you've been going down for 3 days, 3 sessions in a day, for 3 days, basically straight, without any sort of blip at all whatsoever. So if we close this session below 110.20, which is where we are right now, we'll have 9 down. That, in effect, puts us on pace for maybe a rally back up into 110.80 or so before we can head back down. All right. So that's kind of, hope that makes sense. Just kind of an observation. So that's what we're looking at there. Now, moving on to obviously the analog chart, right? So this, if you have TradingView, and the account, I think it's free anyway, but what I've done is just copied the bottoming process back from 2000. Okay, copied it, moved it on over, and matched it up with the low. Now, if you match it up here, if you match that up perfectly, here's what happens. Make it a different color real quick. If you match it up perfectly, here's what happens. Because it's the current period is, we've been ranging for so much longer now, right? You actually end up like we should have gone higher a long time ago. Okay, well, it didn't happen, obviously. So what's interesting is that if then you can stretch it when you line up the high back here with the high from May of 2016, and you actually get a much closer match, right? Even these little wiggles and waggles and up, down, up, right? So this suggests that we're in the final kind of throes of the decline. And this is all about fractals, right? This is, it's the same shape and price. It's just a slightly different time scale. So that puts us basically, right here. So we could be very close to the end of this move. Close as in like it could be the end of this week or maybe even Monday before you get a bigger low of some sort. But again, that low, that area that we're looking at is still, probably at least, 150 or so pips away before I'd even really think about wanting to test the long side. So in that case, we are looking lower here, regardless of I think it can bounce to 110.80 or whatever. I'm not saying to go long because again, the big support I don't think is until we get lower. So that pretty much covers it on euro. There will probably be better things to trade anyway over the next couple of days. Yen crosses are actually one of them. I'll get to that. First, let's look at pound. And this, we had a question from one of our favorite clients. After last week's complete just debacle, right, in the pound, and to her credit, she was trading proper leverage, right? She was not trading over leveraged. So she's okay, right? Now, you have to understand, I've been trading FX for myself. I did some managed stuff at one point, but for myself since 2006, I've been really in the markets since 2004. So I've been through some cycles. What I'm going to talk about right now is basically, how do I deal with trading in this environment in which you have these flash crash type of risks, it seems, it doesn't happen every day, obviously, but it happens enough, right? So how do we deal with it and how do we take advantage of it? Well, look, you like to say that nothing new ever really happens, that, it's all about human psychology, which never really changes. Well, look, if you have your eyes open you'll realize that over the last couple of years, really, I guess you could go back to SNB, January 2015, you've seen some moves that just don't really seem to make a whole lot of sense, right? Here was Kiwi. Okay, this thing fell 9% in 2 minutes last August 2015 before recovering. That actually ended up being the low, right? Dollar Rand, flash crash earlier this year, same thing. Dollar Rand, by the way, is getting close to finishing its ABC, right? Getting close to that. And then, of course, pound dollar. Brexit is understandable. It was Brexit. Okay. This was during Asia and it happened in 2 minutes. Little different. And then you've got dollar yen has really flash crashed a couple times this year. Obviously, you have Brexit, which is still the low. And then August 15th last year is the flash crash as well. So, are markets different now? Yeah, they're different, right? I traded through the financial crisis. I can only imagine if we had the amount of computer HFT trading going on today, if we had that during the financial crisis, I can't tell you, it would be 10 times worse. The markets are, and I'm actually quite scared for that. But how do you deal with it? Well, I guess the biggest thing is never, ever, 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 ever have any, leave a position with any more leverage, than, that you could really get hurt. So let's say even if you're trading, a quarter position size, and the markets haven't really allowed me to get into a bigger position for a while, but let's say that a quarter position size, which I define it, right, as basically 1.25 times leverage. So, essentially, if you're trading, let's say you're trading $10,000 account. So you have a 12K. Let's just, for argument's sake, let's just say it's 1 times leverage. So you're trading a 10K lot. Even if you were in a 10K lot, okay, on a $10,000 account on pound dollar, flash crash, you know, at its worst, let's say that you literally got out at the bottom tick, okay, you had a 6% decline, you lost 6% of your account. That sucks, but you're still around, right? It's not like you lost 50, okay, or even 20, right? So that's the reason, that's rule number 1, is never really leave on enough, you know, too much size, right? Now, rule 2, to trade it, if you've noticed these examples I've given, dollar yen, that was a low for the move, Kiwi dollar, last August, low for the move, right? What else? The dollar rand, high for the move, right? And as you know, when dollar rand goes up, it's a crash for rand. Okay. What else do we have? And then of course pound dollar now. Okay. This could be the low for the move. What's fascinating is that look at the lows that we have right now, the ones that we made yesterday. If you take the extension, you get the range expansion of that target is 120.104. It's right at the low. The low is 120.87. Okay, we could have made a low right here. I mean, this could be a low. We could be heading back to 127.90 to test it. Okay, so how to take advantage of it is, I guess, you know, get ballsy and look to go the other way. And that's why I just posted the chart on Twitter here not that long ago. If you look at this, like a real short-term chart, 15-minute chart, this is a bullish-looking chart. Okay, you have 5 waves up, 1, 2, 3, 4, 5, 3 waves down. Not saying you can't get more complex. This could be A, B. You could go lower and C. Point is, you're bullish on this as long as you're above 120.87. Okay. So I'm looking to buy pound. You know, given the opportunity, you'd like to buy it at a support, or better yet, if you get a move out of this structure, buy you know, potentially get a break and then retest this as support, right? You know, you can trade the position too. So, you know, let's say that, argument's sake, let's say that you get a dip and you end up finding support on this median line, which has been support a couple times, right? Like I've traded pound a number of times over the last, you know, 20 hours. You had the spike into resistance. Okay, I faded it. I was probably in the trade for 5 minutes, right? But you can take a good chunk in a range like this, right? You can take 50 pips on this stuff, right? You know, even this morning on the dump here, right at the European fix. That's another thing. When you hit 11 o'clock New York time, that's the European fix. Okay, European close is half past the hour, but European fix, you'll notice a lot of times the market will get jammed in one direction. That's this bar right here. Okay, it will get jammed in one direction and immediately go the other way, and it sometimes happens within a couple minutes. I mean, that was the European fix, dumped right into it. 1, 2, 3, 4 minutes it took for the market to go higher by 40 pips. Okay, so the only way to do it is to not be in the market that much, so have very little risk, because being in the market is risk. The other thing is, if you're in the market on a setup that you like and you want to hold, then have it leveraged to a point that if, God forbid, it does flash crash, it's not going to hurt you. That's really the only way. There's no secret sauce here. That's it. So let's go back into the analysis of the markets that we're looking at. But that's my little spiel there. And, you know, just being realistic. Okay. I can go into the reasons of why all this has happened and the market structure, but that would be a whole different webinar and would probably end up being fairly boring. So I'm not going to do that right now, at least. Okay, moving on. Dollar Swiss. Don't have a lot to say except watch closely. 99.50, okay? You've got the 618 at 99.90. The year opens 1007. That to me is probably the bigger level. Something crazy is going to happen with Swiss. If you go to the long-term page, and a lot of, some of the stuff on the long-term page is published out in the open anyway, but we're 63 quarters from the tops back in 2000 or 1985 and 2000. Okay, so here we are again. Something big is going to happen to dollar Swiss. So this is one, be aware of the risks here. Given the history of the SNB, I would be I really urge caution with dollar Swiss and not really willing to trade it at the moment. But technically, get the trend line here. Not sure if that really holds. It is near the highs, 950. The 10007 yearly high is more important to me. And finally, this line, slope line, which was resistance or support back in December 2015, resistance in May, that could end up being your bigger resistance. So if you get up there and respond lower, when after you get, say, a move in euro down to 108.70, that might be your spot. Okay. No dice. All right. Dollar yen. Coming up on real big resistance. Slope line here is just from the December high in January high, December 2015 high. So you can see that we're coming up on a spot. This could end up being a pretty big breakout level if you get back up, if you get through this median line in 105.40. So dollar yen, major level to deal with at 104.90, which again is just two equal legs up. Bigger picture, I actually am pretty bullish on dollar yen. And again, it's because of the the long-term stuff here. I mean, we've got, this was back a while ago. This is back when we were down here near 101. Monthly chart, grand scheme of things, this really could just be a dip on the way to 200 or something, 150 at least. Okay, that's still the low, the Brexit low, right? 5-year average, which is the line here that you're looking at, ends up holding. So yeah, that's, I think dollar yen now is worth trading though on the upside. So again, 104.90, see how it handles it. This line here, it's the 25% line. Okay, that may still be resistance. If you get back above here, the median line, you're probably going up here to 109 or so. So dollar yen could be quite bullish, and this actually fits very well with an epiphany I just had on the S&P. Here's your 4-hour chart, by the way. Your median line right here. If you pull off a little bit, okay, you still have support on these 25 line. And remember, we were looking for, I was thinking you get ABC, right, and get maybe another test down here. It just didn't happen. So let's see how this works out. Today, you could have, this could be A, B. You could go a little sideways triangle and go higher. Either way, I like, kind of being a dollar yen bull, looking for opportunity on the long side as far as dollar yen is concerned. We might as well look at the S&P now and then look at some of the other CAD crosses before I go into the other dollar crosses, just keep it kind of consistent. So here's the S&P. If I scroll back, right, and this is the slope, that literally, it just is, all we're doing here is drawing a trend line from the 2009 low, 2011 low, that's it, okay? You got your, your lower parallel 0 line, upper parallel 100% line. You know, your 25% line down here, which support actually was support earlier this year. Median line was support back here after Brexit. I mean, these things have been nuts, how crazy they've nailed the highs and the lows and big inflection points. And that's why I tweeted when I said we have the webinar coming up. We are one of the bigger inflection points right now because we're back at this line, at the 75% line, which, look at this, has been, you know, pretty big as far as being resistance. And since then, big support. Okay. If I scroll in, you can see it, support, and we're getting really close again. So look, I don't know what's going to happen today with the Fed, but how perfect would it be to end this rally from the low back here, okay, in February, January or February, depending on, you know, what your you know, what index you're looking at, but February for the S&P index. This lines up as literally a perfect diagonal, right? 1, 2, 3, 4, one more high five. In fact, if I look at the S&P futures chart to get the intraday count, you have 3 waves down, okay? 3 waves up, 3 waves down, probably a triangle B wave here. C wave ending yesterday, meaning that you have probably wave 1, wave 2 of a diagonal, about to go higher in wave 3 of a diagonal, okay, and then pull back and forward, and then go higher in 5. Meaning that, and I hope this is making some sense, I'm talking in kind of like Elliott wave language right now, but meaning that from the September low, you're making a diagonal, but you're also making a diagonal from the January low. So that means that you are potentially ending an entire sequence of strength all the way back from January and potentially all the way back from much longer as a diagonal within a diagonal. That is the weakest possible structure that you can have. And that's the kind of structure that precedes a crash type of event. Okay. I have never, or I have not in a long time. I don't even know if I've talked about it in these webinars, but talked about potentially doing a bearish play on equities because it literally never pays. Well, after we get one more high, it could be that time to buy some puts or something, right? Because that's the type of diagonal within a diagonal. That's the type of thing that happens before you get a crash. All right. So the immediate trade is higher from here, right? I'm talking about later in the year. I mean, you know, this could be a new high. This is not going to happen in a day, right? We're a bit off as far as timing is concerned here, but something to kind of prepare for, in my opinion. So anyway, so if we have this risk trend is about to be off to new highs potentially, right? You know, then you know what? We might actually get your classic risk on trade. It's a possibility, which would mean something like Aussie yen and Kiwi yen and Cad yen could be really exciting. So the best one of the lot is probably Aussie yen. Okay, here's the Aussie Yen chart, and we're going a channel all the way back to November of 2014. It's been a long time that we've been within this channel, and the low is on Brexit, right? And since then, you do have a sharp advance and a drop and sideways trade, and this sideways trade has kind of what I call like a saucer bottom on it, and it might be about to explode to the upside. So it's got the pattern wise going on there, which is extremely bullish. And you know what you also have on here is for pitchfork wise, is you've actually got a raised floor, right? We have the lows down here on the lower parallels. You've got support now at the median line. In fact, just recently, support right here on 915. Okay, so if we consider that you have a big move higher, is probably either a first or a second wave, followed by a decline lower, which is choppy and corrective in nature. The next move higher is a third or a C wave, which is probably going to be quite substantial and sharp and exciting. So this could be one to trade as a breakout sooner rather than later. Let's see how the day ends. Obviously, you have minutes coming up here. If you do get a pullback in this, then I would watch for support the month open, which is 77.50. Okay, I don't know if you will, obviously, but if you do, 77.50 is your spot. Throw the moving averages on here. And you got the 20 there and the 55, 77.50 as well. And the 200 looms up here too. So my guess is that given how the market's traded on the parallels, median line, raised floor, that you're probably going to break through the 200-day average, okay? And you're going to break through this parallel here, okay, would be my guess, because again, you have a raised floor. So the 200-day average has been literally, perfect resistance since December of 2015. So we get through there, it's a good behavior change. So Aussie Yen, really big time potential on the upside. Let's look at Cad Yen. Cad Yen could be even better. Same idea. The channel is not as clean as Aussie Yen. Aussie Yen channel is scary clean, but here's the channel with Aussie or Cad Yen, excuse me. And you can see that you also have a raised floor, okay, because you can see the support down here did not make it down into the lower parallel or the lower channel line. All right. So Cad Yen could be a big bull. Cad Yen, if we scroll in here, you can see that Cad Yen is pressing the resistance line here now that extends back to July. Got a new low. You could be setting up for a double bottom of sorts on this. Okay, in which case you could have a target all the way back at 80, near 89, which would actually put you back at the April high. Okay, so we're talking about 1,000 pip rally potential here. With even if you're looking at stops under 75, you're risking, say, 400 points. Now, look, I would never risk that much on a trade. I would be looking at probably just because at this point you actually have the gap here, right? Monday, Tuesday, Wednesday, you have a gap. Friday, put the stop under the gap. So under last Friday's low. If we get a breakout today, again, see how the day ends. If you get a breakout today, that's what I'm looking to do. So Cad Yen is certainly on the docket, and even Kiwi Yen, which Kiwi, I don't know what the hell's going on with Kiwi. It's coming into trendline support, but here was here's your Brexit day, right? The close from that day is actually acting as support today, or yesterday, I should say, recently. So, that's even potentially, a positive. Where did this go? Oh, there's nothing there. Yeah, no dice. Anyway, Kiwi Yen is probably one I wouldn't necessarily trade at the moment. I'd rather trade Aussie Yen, or I think Aussie Yen and Cad Yen are your best looking ones for potential big moves on the top side. Moving on. After that, I'll go back to some other non-dollar crosses later. Let's see. Even Euro Yen looks cool, right? Here's the 4-hour chart. Watch, this is one that you have 3 waves down here, but this is, you'll probably get a pullback. I would watch for pullback at 115.40 in euro yen. Okay, 115.40. If this is a bull, then you're going to see more than likely support on a parallel like this, right? If you pull back from 1540, you might see support down near 1440. Okay, otherwise it's a breakout. Moving on then, euro yen. Let's go to Aussie, Kiwi, and Cad. Aussie, as you know, short term, talked about this in the update last night. I actually think that Aussie's going to try to hold this bullish structure. So I'm looking at this as an A, B, C that's unfolding from the highs back here. You have big A, little b, or big A, big B, big C, okay, down from the highs in August. You have an impulsive rally on the top side, barring this being a truncated move. You have 5 waves down. This rally is probably unfolding in 3, right? A, B, C, and then that's B. So we're looking at, potentially getting some sort of a minor top in Aussie up in the 76, 20, 40 area. 76.05 is your week open price. I guess that could be it, a level to watch. But the top of the former fourth wave is 76.27, 50% of the retracement 76.21, and then the resistance line here. Okay. Either way, what we're talking about is getting one more push higher. Maybe it happens here on the minutes, and then rolling over for a drop lower in wave C. And your big area is probably 74.62, and here is why. Trend line, get rid of that, get rid of the Fibonacci. All right. 74.62. See the close on 9/13? That is daily reversal support. It's the low. Okay. By the way, daily reversal resistance is right here, 76.99 resistance. Okay, so you're looking at this area is basically being support sooner rather than later. So, right, we're looking at A, B, C, one more dump, and then looking to go higher. And that, of course, is pretty well in line with the Aussie analog, right, that we've been looking at or following. So this, suggests we might screw around for a little bit longer before really going higher. But ultimately, am looking higher, okay, in Aussie. It's certainly a buy the dipper. So yeah, we're getting into this, very exciting time finally. I think we'll probably get some breakouts here in the fourth quarter. Dollar CAD. Dollar CAD's I'm actually, I've posted a shorter term analog here, and I'm wondering if this is just a repeat. If you just look at the way it dumped, basically looking for support in dollar CAD now at 31.97. Bigger picture, dollar CAD to me feels like it's still gonna maybe roll over, just pressing up into this, potential wedge area, right? We've got the divergence at all these tops. At the moment we have an uncovered close. from Friday is 32.93. One more poke higher, maybe then we can move lower. But for the moment, it's probably best to just follow the ones that are clear, and like Aussie's one that's actually pretty clear, right? And then the other ones will come into focus at some other point. Kiwi is one that's not super clear from a pattern perspective, but from a levels perspective, this thing looks pretty good. Okay, watch 70.20. Okay, 70.20. Your minor resistance is 71.08. Okay, you can see it right here. Low back there, low back there. 71.08 might hit that, might take you down to 70.20 before you get a low. Okay, let's see. I get a few more crosses to look at, and then we'll take a look at gold and oil and all that stuff. We got Canwall wanted to check that stuff out there. All right. So, made reference last night to what was it? Euro Aussie. As a market that could really, really do some damage on the downside. And, if you look at it on a weekly chart, it's probably better, cleaner. Essentially, you have a, this is a big descending triangle. Okay, you have a series of lower highs. Okay, and more or less a flat, bottom here. So, I mean, this is a descending triangle, and this thing could really, 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 really go. Have a feeling that it'll probably be more on Aussie's strength side than it would be on Euro weakness side, but either way, this is, I think, one of the next great trades in the market is the short Euro Aussie trade, and at least setups. And there's your trend line. Okay, so interestingly enough, we actually did reverse at it last week. Okay, this was just last week we were up here, and here we are now down towards the lows. You can see that you've got a possible head and shoulders to launch this decline. Okay. Now, I said that last night 48.80 could be resistance if we get there. I don't know if we get up there. Okay. Would prefer to let Aussie play out its thing first, but look, if we close down below, if we get below 44.60, then this thing's kind of, to me, it's kind of all over, and goodbye, see you later, Euro Aussie. It would be the market. This would be the thing to play on a breakdown. So Euro Aussie, massive, massive decline is possible. Euro Cad is also an interesting. You have 5 waves down. Don't forget, since the very beginning of the year, we had a 5-wave decline in Euro Cad. 1, 2, 3, 4, 5. If you recall, we were looking a little higher. We were looking towards 50.20, right? And maybe 51.50 on this run, but we did fail, and you actually have put in a topping pattern now. This is also a head and shoulders, shoulder, head, shoulder, and we're actually completing it today. Okay, so you go to a 60-minute chart, and you can see that you do have, drop. You could be building, the kind of top in order to move significantly lower. So I haven't looked at any sort of slope on a short-term here, but this could be something that ends up working for a while, right? So 75 line here, more or less holding up. It would be, you know, kind of nice if we could get a pop and maybe sell it up at the month open at 47.30 as your, you know, as your attempt. At least that's where you'd want to look for resistance. You know, so Euro Cad might be an interesting one to trade really over the next day. Oh, I don't even have that right. Hold on. There we go. I still think 47.30 would be your spot. High up here. You end up, you know, rallying up into this area would give you a big time sell. So Euro Cad, Euro Aussie, you can see that the commodity currencies actually seem to be lining up for something very interesting. Which, look, if the interpretation on the diagonal of the S&P is correct, that means you're going to get kind of a crazy move towards a risk on type of thing, you know, which would fit very well with this for these moves to really play out. Yeah, so as I like to say, the seeds are planted, they're sown, and we will see if we're on the right track. All right, one more non-dollar cross. Aussie Kiwi, you remember this? So the big bottom appears to be happening. You know, as of course got taken out at 104.90 back here, and then the move started to happen. But pay attention to 107.70. You've got an upper parallel here. You've got the highs from July. So you could be getting into an area that you could see a pullback for Aussie Kiwi. If you do, or if we do, my guess is that this line, right here, which you can see crosses through these levels in the resistance areas here, and even some minor resistance back at the very end of September, my guess is that that ends up becoming your big time support, right, for the next move higher. But yeah, Aussie Kiwi, still a big time low being put in place. Finally, oil and gold. All right, crude oil. If we look at price action from back just you know, mid-September, which here's another reason to start looking higher in the S&P from here. Okay, these line up actually well. This is the orange S&P 500. Is it perfect? Of course not. But look, you've more or less had peaks around the same time. August, when was your next bottoming point, right? September, crude was a few days later. Next little peak, 922, that was right on. Then a dip, then another rally, and then a dip. Crude's pretty clean as far as where to buy it and not, you know. And really, for me, I think this is probably 1, 2, 3, 4. This drop is 4. Okay, look for support at 49.50, and then we're going higher in another leg 5, which might end up getting into 54 bucks or so. Okay. If I show you the daily chart, get rid of this for now. Here's the daily chart. Okay, so if you draw the trend line here and you extend your parallels, the median line actually crosses right through the high that you had back in August. So we're looking back to the median line, essentially. Okay, and let's say we get that low at 49.50. I don't, if we do, great. And then you start looking up towards $54. $54, a little above 54 are the highs from back here in February 2015. Okay, you've also got a little inflection point up here from July 2015. You have the median line and an intersection with this big time resistance area. Okay, that resistance is defined, all these slope lines are defined by the 2013-2014 trend line. Okay, so you can see the major levels that these lines have, produced. I mean, you can go here too, here, here. Okay, well, the next one's up here, $54. So essentially, I like, buying between 49 and 49.50 in crude for a move up to $54. And that might take care of the dollar for a while if you get down here. So watch crude oil closely. And, watch gold closely. Oops. As you know, I do like gold to find a low near 12.20 or so. Okay. Trend line and associated parallels all the way back from 2011, 2012 high. Okay. 12.20 is your region for big time support. You've got major inflection points, and two of them, in fact, from two lines. So, you might get 12.20 when euro trades down to 108.80, 108.70, 108.80. There's a really long-term chart too that says we could indeed trade. Yeah. Oh, wait, was it this one? This is the one. Okay, so you can see this is the 1976 2001 line, and what we're watching for here is you can see how this was support. Okay, back here. So this tells me that you have made a very important, a very important low, and that you're going to go higher eventually, right? At this point, you're just trading around the median line from a structure that goes back, over 30 years. So that's one reason I think that it's proper to look for a support level in gold, right? Is this long-term chart. And there was a question from Canwall on silver. Silver's still holding the support. I mean, that's the thing. Silver's still holding. Now, I don't think it's going to hold because, well, I've got gold support lower. So look, maybe I'm wrong on gold. Maybe gold's actually bullish. But I will say this. this is a chart from back in the day, ABC, X, ABC, okay, that if you do break that daily structure on silver right here, right? If we do break that, if we go below this level, then here's where you're going to find silver support, probably near the red line, which is actually not until the low from May, and that would be a pretty sharp drop from here. That's 1580. Let's see what this parallel looks like. That could work. You can see the lower parallel. It doesn't quite intersect that low. It's more like 1625, right? And that's in line with the high back here in October of 2015. Now I'm getting excited. All right. You know how we talked about this a couple times this year about the markets finding the same, like on the same date, basically trading to a level. So if this is May, let's see, what's this? May 2015. Here's October 2015. Okay, so here's that high. Okay, that is 1634. So let's say that this could work out really well. Probably need to look at it on log scale because it's silver and the charts are obviously, you know, you're moving from a very low value to a very high value. So percentage-wise, they're big. You need to look at the levels here on log scale. But 1635, if gold gets down to 1220, 1217, 1218, whatever, then this is about as good a spot to get to for silver as you'll find. 1634. Crude oil is the cleanest commodity. I'll watch 49 bucks, 49.50. You know, look, I know it sounds like a big decline from here to 1634, but you know, if you think that this move could end with kind of a, you know, a crashy type of washout liquidity thing, then you'll probably could see it sooner than later. So all these charts speak to stuff very similar. That's that the final move lower, the declines that we have, you know, underway are going to prove to offer the biggest opportunities to sell the dollar that we've seen in a long time. So that's how it's all shaping up. Patience, patience, right? It's not happening today, at least I doubt it. I still think euro goes lower, right? Even Aussie might be a sell. But I'm going to wrap it up there and finish it up. We have the minutes coming out now in just a couple, in 1 minute. 1 minute is when you get the minutes. So all these levels that were outlined here, I hope help. And all take care, be careful out there, don't do anything crazy. And I'll talk to you guys later. I'll get this archived soon. Good luck here in 30 seconds. All right, talk to you guys later. Bye.